Hi, everybody. Welcome. My name's Cormac Kinney. I'm the founder of Diamond Standard. Thanks for coming to this deeper dive into the Diamond Standard commodity, where we're going to have a Q&A. I'm going to walk through a few of the slides. I want to walk you through the concept, explain how we make diamond commodities, and talk about the investment thesis. I can talk about give you my background very briefly. My background's computer science. I have 3 degrees from Carnegie Mellon University in Pittsburgh. I'm from the Midwest, made my way east. We live in New York City now. And I spent most of my career building trading systems. I invented something called heat maps, which a lot of you might have seen on baseball. Now they use it in baseball to show where the pitches go. But my focus has been on using large data and distilling that into something actionable. And that's very much what we've done here with the Diamond Standard commodities. Diamond Standard is focused on turning diamonds into an investable asset for the first time. And I'm sure everyone here knows all about diamonds. Since the pirates of the 1400s, they were always trying to plunder the diamonds. So diamonds are something that humans covet. They've always wanted diamonds, and everyone knows where they come from and that they're valuable, but they've never been something that you and I could invest in because every diamond is a little bit different. And since they're all different, there's no price you can just look up, and that's reliable. For an institutional investor, it's more of a technical problem, which is that they can't mark to market the value of a diamond they might hold. And if you're a BlackRock, for example, you need to tell your investors every day, this is the value of your position. You could never do that with diamonds. And as a result, diamonds are, not touched by any institutional investors. Our goal was to change that by making a fungible commodity. Fungible means that you don't care which one you get. They're all equal. They can all be traded, and they have the exact same value. And you've had that with gold bars forever. If you trade gold on an exchange, you can't just show up with a pocket full of gold coins. You need what's called a good for delivery bar. And in the case of gold in the US, that's a 400-ounce bar. In Europe, it's actually a 1,000-gram bar, a kilo bar. But we started at that same exact foundation. We needed to make a bar and a coin that were all equal. They're not identical, but they're all equal gemologically. And that's what this represents. And I'm sure you've seen it. You've seen it in front of you. Those are yours to take, those samples. Unfortunately, they're not actual diamonds. Those are cubic zirconia in the samples. But the chip works, and the QR code on the back works. So if you scan that coin or bar, it looks up a coin on our website and shows you all of the certificates of all the diamonds. So the whole point of Diamond Standard is that these coins, are all equal. Since they're all equal, they trade at the same value. And so I want to explain a little more depth how we do that. I know Eric covered this a little bit in our keynote a couple hours ago. But you'll notice we have a coin and a bar. And if you ever look closely at the bar, you'll realize those are big diamonds in the bar, and they're relatively smaller diamonds in the coin. Between the coin and bar, we actually use 94% of all the different types of diamonds that you might buy as a consumer. What I mean is the range of carats. We use everything from 0.18 to 2.05 carats. We use all the diamonds from flawless down to what's called I1, which is slightly imperfect. And we use every color of diamond from D to L color. Those are basically all the diamonds you'll find in Tiffany's and Zales and everything in between. Obviously, there's no pink diamonds, unfortunately, no blue diamonds, no fancy things like that. But for the white diamonds, we use about 94%. For us to make the commodity, we needed to force the market to do something it's never done before, which is to create price transparency. And we did that by bidding, and we do that every week, by bidding on every possible combination of carat weight, color, and clarity. What that means is I don't care what diamond you have, as long as it's natural, as long as it's within that range I mentioned, and we have to get it certified. But any diamond you have in that range, I have a cash bid for you 5 days a week, where I'll put cash on the barrelhead, and this is what we pay. We don't do that with literal cash. We built an electronic diamond exchange, which today is the world's only electronic loose diamond exchange. And we have 175 members that sell us these diamonds. On an average week, we have over 1 million diamonds offered to us on this exchange from all of the largest diamond companies in the world. Tiffany's is a member of our exchange. On that exchange, we don't have a price book where I look up and say, okay, that's worth X and that's what I'll pay. Doesn't work that way in economics. You have to bid and raise your bid until somebody says yes. That's what's called price discovery. And that's exactly what we do, and it's transparent. So we make millions of bids a day where we bid on every diamond type. And we're not dumb, we bid low, obviously, but vendors aren't dumb either. They usually say no. And then we have to raise our bids until somebody says yes. And that's what these little circles represent, are all the bids we make on a daily basis. We make 16 million bids. We can't possibly buy 16 million diamonds. There's only 1 million on the exchange. But what we do is, and this is the breakthrough, is we buy what's called a statistically valid sample. That means we have to buy a little bit of every different type of diamond. And the frequency of the diamonds we buy match exactly what's found in the earth. So, for example, only 1/4% of diamonds are flawless. So 1/4% of all the diamonds we buy every week are flawless. And we bid whatever it takes to buy those flawless diamonds. So that at the end of each week, we have to buy a minimum of 10,000 diamonds, because you can't buy 10 diamonds and hope that it's statistically valid. You have to buy a large number. It's called the law of large numbers. So we buy about 10,000 diamonds, sometimes 30,000 per week, and that sample is a little bit of every diamond type, and we make all of that public. We don't expect you to trust us. We don't believe in trust. We make everything transparent and public, so anybody, whether it's today when I make the coin or in 30 years when they buy the coin, they can find this data, which is on a blockchain, so we can't change it, and the data will prove that we did our job, which is we force the market, by bidding, we force the market to tell us what every diamond's worth. And we buy, as you can imagine, a pile of diamonds. That pile of diamonds that we buy this week and the pile of diamonds we buy in 30 years, those piles will never be identical. They may both have 10,000 diamonds, but they'll never be the exact same 10,000. But if you analyze today's pile and the pile in 30 years, you'll see that the statistics are the same. The frequency of G color, the median carat weight of all the flawless diamonds, that data is always the same. And that's the proof that the samples are always equal. That entire process, by the way, is regulator supervised. The last step, which is also a computer science breakthrough, is we figured out a way to use optimization to divide that pile of diamonds into the coins and bars, so that every bar gets a fair chunk of that pile, but it's not just a random sample. Every bar or every coin contains a yield curve of diamonds, which means you'll never find one coin that has one beautiful, fantastic diamond and 8 little tiny pieces of junk. Every coin always has good, better, and best, small, medium, large, all the color range, the carat range, etc. Every coin is optimized so that it contains a yield curve of diamonds, and they always have to contain an amount of scarcity equal or greater than the public standard. That standard is that whole statistical model. When you scan the back of a coin, it tells you this, it shows you this chart for your coin. How did your diamonds line up on this chart? How do they equal every other coin? And you can also see all of the certificates for every diamond. Again, following my rule, nobody's allowed to trust me. Every diamond we buy before we buy it is graded by 2 third parties, the GIA and the IGI. Diamond Standard actually never touches a diamond. All of the diamond coins are assembled inside the Gem Lab. So that was our last breakthrough, was the optimization. So I've already mentioned if you scan it, it shows you, here's an example. You can see here's the 8 diamonds inside that coin, all of their grades, all of their weights, and if you click on the certificate, it'll take you to the GIA to see that diamond. If you take your coin to a jeweler and you say, can you verify for me that those diamonds are in here, they can tell. They can measure those diamonds. They can look for the tiny imperfections that are supposed to be in there. And so this is impossible to counterfeit, at least without, beyond a casual inspection, because the diamonds themselves are part of the anti-counterfeiting. But everything we do is public. So what do we do with this? Well, we started exactly how gold started. Before you had gold dust and you would trade it and you would measure out a little bit in every transaction, then they finally made a standardized gold bar, starting with gold coins. We started with that step. We now have a fungible diamond coin and bar. Every coin and bar are equal to each other, and therefore they can be traded in a spot market. And that's the first thing we launched. The next thing we wanted was all of the different products you have with gold. You have futures, you have ETFs, you have margin, you can borrow and lend gold, the custody. We had to develop all of that. And we had an incredible opportunity because we're storing all of the diamond information on the blockchain. We realized we could add a feature that if you trade that token, you're trading the actual commodity. So inside every bar, and you can see it in your sample coins also, you see there's a white layer from the side. That's actually a wireless computer chip. It has an antenna around the edge and a little chip in the center. That computer chip does 3 important things. Number 1, it provides auditing. That may or may not be important to you. It's very important to BlackRock that they can audit the asset behind their fund, for example. But that wireless chip will actually respond to the owner and confirm that it's there at the vault. Number 2, that chip provides authentication. So if I hand you this coin on the streets of Geneva, Switzerland, wherever you may be, you can actually use your phone and you can authenticate this. There's also an optical pattern, which you can also see in your sample. Every coin has a unique optical pattern that's part of that authentication process. But I think by far the most important feature of that wireless chip is that it stores this blockchain token, the token that proves that the coin is fair, that stores all of the diamond certificates. That token is public, it's on the public blockchain, but you own the key. When you own this commodity, if you leave it at a vault like Brink's, you hold in your phone the key to that token. That token, we have the world's only regulatory license in the entire world for a commodity token. What that means is, if I deliver the token to you, you own the commodity legally. Once we can transact using a token, very suddenly we're able to support all of the different types of assets that you have with gold. So right now, the vast majority of our clients keep their commodity at Brinks. We also have a relationship with JP Morgan. Yes, sir?
Whose server does that reside on?
Well, you have a choice. When you buy this, your first choice is, I want to keep it under my bed. We'll send it to you, and you can keep it under your bed or buried in your backyard. But if you have this at home, you can't trade it. Your other option is, we have a relationship with Brinks, and they will hold it in your name at their vault in Delaware. Delaware turns out to be very important because there's no sales tax in Delaware. And a lot of people don't like to pay sales tax on their investments. So if you choose to keep it at Brinks, only then does the token get activated. And it's not on anyone's server, it's on a public blockchain where no one knows it's you, but you have the key and you can transact it. That make sense?
So if I retain it in my possession for 10 years,
How do you trade it? So his question is, if I keep my coin in my possession for 10 years, how do I trade it? We have a solution for that. All you do is you contact us through our website. We create a return authorization. You actually send your coin to the Gem Lab. You don't send it to us. The Gem Lab inspects it, and then they deliver it to Brinks. And once they deliver it to Brinks, Brinks activates the token, and you receive the token that you can then trade on our spot market. We do charge for that. We charge $100 for you to return your coin. If you keep your coin at Brinks, you have to pay for custody, and that costs $36 per year. I think that fee will go down as we're expanding our vault. Okay, so last thing I'll mention, that token, because it's so efficient to transact a token, you don't need a broker, you don't need an exchange like the NYSE, you don't need any of these custodians and middlemen that when you trade stocks, you can trade that token directly, peer-to-peer, and it's so cheap we don't even charge any fees. We just built it into our trading system that you can trade for free. But the next step is that token has been approved to settle futures contracts on the CME, which means that if you're a futures broker and you've written a contract, to settle that contract, someone just has to email them the tokens. So again, extremely efficient. The next things we've already launched a fund in partnership with Horizon Kinetics. We've already filed an ETF filing here in the United States. We already have approval for futures and options. And the next exciting thing we're launching is a breakthrough currency called Bitcarbon, and it's already inside here. So Bitcarbon is what's called a commodity currency, which is a legal distinction. It means that if you own that currency, you actually own a piece of a commodity. It's not a security. That commodity's value is based on the value of this. So each Bitcarbon is 1/10,000th of a coin, and if you're a business and you accept Bitcarbon as payment, you can always cash it in for a coin, and there's no fees to cash it in. That's a major breakthrough. So we talked about the benefits of owning the coin. When you own the coin, and if you keep it at Brinks, you can trade it 24 hours a day for no fees. 90% so far of the owners of the coins, which include almost 1,000 Stansberry clients, anyone who's wanted to trade this has traded it at a profit from what they paid because it's performed very well. But because there's no fees, because there's no middlemen, you're able to trade it and capture that profit. And if you own the coin, you can trade it at any time. There's no minimum. Anybody can buy it. You don't have to be an accredited investor. You can take physical delivery, and you can also lend it out if you want. That's when you own the coin. A lot of people don't like to own commodities, though. They prefer the convenience of a fund. They want to have it in their IRA account, for example, or with their broker, and they don't want to deal with a custody fee every year that they have to pay. They don't want to risk that it gets stolen if it's kept at home. They'd rather just use a fund. We launched the fund with Horizon Kinetics, and it provides all of the security. But most importantly, it includes an auditor. You know, if you're a fund and you invest in this, you want to have a third-party auditor who's actually going and looking at the coins. And we have a third-party administrator who reports every day what the coins are worth. They get it from Bloomberg. So that makes a commodity into what's called a titled security. And there's a lot of investors that can only invest in titled securities. That fund is available just at, you see the website at the bottom, fund.diamondstandard. It's on the back of the book also. Yes, sir. So it's not a listed fund, so there's no premium or discount to report. It's an unlisted Reg D fund, and it will become quoted but not listed on the OTCQX market. All the fund does is hold coins. It doesn't do any other activities, but it just makes it more convenient. And it charges a fee. It's cheaper. If you want the cheapest access, you just buy the commodity. And I would suggest, if you don't plan to trade it, you keep it in your vault at home, vault at the bank. If you think you might want to trade it, you leave it at Brinks. You'll pay $36 a year. That's very low. It's a $6,000 coin. So $36 a year is not very much. But when you own the asset, you have that flexibility. You can take delivery at any time. You can trade it at any time. And that's the cheapest way. The cheapest way is to take it at home. The second cheapest is to hold it at Brinks. It's more expensive to hold it in the fund. Yes, sir.
So is the coin valued at retail price or wholesale?
So the question is the coin valued at wholesale or retail? We don't set the price. So it's like with gold, there's a market for gold, and it trades. And we'll show you in a second in our spot market where these trade. The price of this and the price that we sell it at is based on what the market spot price is. So we don't set the price. We wake up every morning and we find out what the price is. The exact same way if you sell gold. Barrick Gold, they may produce a lot of gold, but they don't set the price. We're the exact same way. Now, if you were to go and try to buy you pick any random coin, and they're all public, and you say, I'm going to go buy those same 8 diamonds on 47th Street in New York, and I'm going to pay cash. This is trading at $5,700 today. There's no way you could buy these 8 diamonds for $5,700. They would cost you, I would think, at least $7,000. Now, if you're a diamond dealer and you have connections and relationships, you might be able to buy it for $5,000, $6,000, but more likely you're going to pay $7,000 or even $8,000. Now, if you then walk down 47th Street 20 yards and you try to sell those 8 diamonds you just bought for $7,000, I bet you couldn't get more than $4,000 for whatever door you walk in. And that's been the problem with diamonds, is that haircut. Everyone's buying at retail and selling at below wholesale. You could never make money in diamonds until now. If you buy this on our on our site, it's $5,730. If you were able to take delivery instantly, you could sell it on our spot market for $5,750, a $20 profit. But you don't get delivery instantly. It takes 45 days for us to produce the coin. We buy the diamonds using your money. We're an agency, and we charge 3.5% through our exchange to buy the diamonds. That's our cut out of the proceeds. And then when we deliver it to you as long as at Brinks, you can sell it on the spot market, generally for the spot price or above. Yes, ma'am.
Kind of following up on the ownership, if I take possession of a coin, is probably to get to, and I want to keep them at home, but at some point I die, my kids inherit them, so appreciate those for any kind of giving. And it's the same thing if they want to trade it. Is there any record that I own it, or is there, who has it?
Yeah, so her question is if she buys 10 coins, keeps them at home, and perhaps someday she wants to give them to her grandchildren, is there a record of who owns it? There is a record with us. It's not public, and it's actually in Bermuda, which is where we're regulated, and if we sold them to you. Now, if you give them to your grandchildren and they have them in their hands, all they have to do is return them to us, and they fill out what's called KYC, Know Your Customer, and they state that I'm the owner, and then we will deposit it in Brinks in their name. It's personal property. It's not a security that needs to be transferred through a custodian, for example. Yes.
But I have another question. I want to go back a little farther. You know, you talk about the owner and, you know, things on the realtor, but that is another factor?
Yes. Cut's a very important factor. So her question is, there's other factors about diamonds like cut. There's also fluorescence, there's shape, there's a lot of more minor factors. All diamonds in the diamond standard coins and bars must be very good cut or excellent cut. Though we only take the top two categories. We don't take good, because good is not actually good, it's bad. So we don't, and our computer system pays a premium for excellent versus very good, and that's part of our calibration. So we do differentiate between that. Yes, sir.
So am I right at this point in thinking that title is possession?
The question is title possession? If you take physical delivery, title is possession. If you leave it in Brinks, the token is title. And you can trade that title as a token. You can give that token to your grandchildren, and they can then trade it. But once they're held in Brinks, the coins and bars never move. You trade the title.
You have a plan that token will eventually be traded on Coinbase or something?
Yes. The question is, will the token be trading on Coinbase? So we've built what's called an ERC20 token. It's the standard public fungible token. The problem with Coinbase wants to work with us, and we've been working with them. There's not enough volume. So for a token to be traded on Coinbase, they make money from transactions. I didn't want my clients to pay all these transaction fees, and there's not enough volume for them to be interested yet. So for now, we built our own free exchange where we've concentrated all the liquidity. It's a great solution for our investors. Yes, sir. Can you buy the token without the commodity? No. So when you buy a token through our marketplace, the Brinks guarantees that that coin is sitting in their vault. And the tokens are only in existence when the coin is sitting at Brinks. When you take the coin at home, the token is what's called frozen. It's not transactable. It doesn't actually belong to anybody. It's sitting in the coin itself. It's a great solution. Yes, ma'am. If the coin... Yes, you can. And whoever buys it from you can decide to take it home too. So Brinks is ready to deliver any token transacted on our exchange. They will deliver. They charge a fee. It's like $40 for shipping. But guess what? If you live in New York or Massachusetts and you buy the coin and you have it delivered to Brinks, there's no sales tax. When you take delivery from Brinks, there's still no sales tax because Brinks didn't sell it to you. Brinks is sending to you your personal property. They have nothing to do with any taxes. You do need to report it, though, to Massachusetts. Yes, sir.
In that case, once you send it to Brinks in custody, it gets registered, it's now tokenized. Do you take possession of it, or is it tokenized?
So the question is, if you send it to Brinks and it's tokenized, and then you take it out, is it still tokenized? No. So when you take delivery from Brinks, Brinks requires that you send them the token. So Brinks receives the token, they destroy it, because it's called signing a transaction. They destroy the token, and then they send you the physical. So there are no tokens existing except for those for the coins that are sitting at Brinks, which is about 95% of them. Yes, ma'am.
How do you keep track of the value? That only buying one coin every 6 months and I end up with 30 coins. Is there an easy way to determine what I paid for each token?
Yes, ma'am. So the question is, if she buys 30 coins over several months, can she keep track of what each one costs? They're all worth the same, so they're all the same market value. But when you go to our website, you have what's called a wallet, and it shows you every coin you own, all of the diamonds, and the price you paid, and what they're worth today. And from that wallet, you can press sell, and you can instantly sell it at the market price with no fees. So you have absolute transparency on what you paid, what they cost, what they're worth, and you can sell them at the market price instantly. It's a great feature. Or take delivery. Say it again, sir. The number of coins? Oh, I don't know, around approaching 10,000. The question is,
How many, 13,000, the number of points you have, the varieties, how many varieties?
how many varieties? Well, there's only one variety of coin. One standardized coin and one standardized bar. So we only make two things, and that's our entire job, is to make these two things. You may have been also wondering, is there a limit to the number of coins, like there is with Bitcoin? Well, we haven't enforced a limit, but every time we make a coin, we have to go and buy the diamonds. Obviously, we're making hundreds at a time. So our limit is the number of diamonds in the world. So it's a very large limit, but our expectation is as diamonds catch up with palladium, and as we buy more and more, that's going to drive the price of diamonds up and also drive the return on your coins that you own. Yes, sir.
I have 3 questions. One, sorry, this is the first one. What's the relationship between the coin and the bar? Is the bar 2x the coin, or is there a value?
Great question. So the question is, what's the ratio between the coin and the bar? It's actually 10x, because as diamonds get larger, they get exponentially more valuable. So all of the diamonds in the bar are 0.75 carats up to 2.05 carats. And through the magic of math, we've calibrated them to be 10x. And for example, for our futures contract, it can be settled with 2 bars or 20 coins. Same with our currency. We maintain that ratio of 10 to 1 through all of the different assets that use the coin, including the fund.
Second one is, if you sell for a gain, how is it taxed? Is it short-term, long-term, collectible?
Yeah, so the question is, if you sell for a gain, how is it taxed? So number one, you're selling personal property. So it's taxed the same way the things you sell on eBay used to be taxed, except now eBay reports your sale. We don't know, on our exchange is actually an independent company, we don't know your cost basis. So we have no way to calculate if you have a profit or loss on your sale. We actually don't record the owners and the transactions. We just do the transaction. So it's up to you personally. You should report your gain as a collectibles gain, which in the United States is a 28% capital gains tax. But it's up to you to report it.
And what's that percentage?
For capital gains, for collectibles, it's 28%.
And why don't you refer to palladium as in relationship to catching up with palladium?
The,
Specifically do with palladium?
no, the question is, why do we use palladium as a reference point? So if you look at this table, we have the 4 leading precious metals by their market cap, right? So all the gold in the world is worth $9 trillion, and 30% of all the world's gold is held by investors. And what I mean by investors, I mean not jewelry, not electronics. It's gold bars in a vault. For silver, that number is 19%. For platinum, it's 17%, and for palladium, it's 15%. It's also 15% for rhodium, which we ran out of room. But palladium, I point that out as the lowest hurdle. We believe that now that we've solved the fungibility challenge, now that we've launched a spot market, we have approval for futures, we're launching a fund, we're launching an exchange-traded fund, we think that diamonds will catch up with palladium in that 15% of all the world's diamonds over time will be locked up in coins and bars in a vault to become equal to palladium. And the investment thesis is very, very simple, that there's no way we can buy 14% of the world's diamonds without driving the price up 3, 4, 5, 6x. And that's what makes this, in my view, a very exciting investment opportunity because of simple supply and demand. You don't have to hope that we do well as a company. You don't have to hope that we don't go bankrupt or that there's a return or inflation does this or that. The simple supply and demand dynamics support this commodity going up in value. Yes, sir, in the back.
So if it's an investment in a fund, is that still taxability under a collectible, or is it going to be more capital gains?
No, even if it's in a U.S. fund, in fact, GLD, if you invest in gold ETF, it's taxed as a collectible because of the underlying asset. The question is a fund taxed at the 28% capital gains rate? And the answer is yes. Yes, sir. You've got a lot of good questions. I like it.
I saw your presentation this morning, you did a nice job. It was almost as if you'd given it under text.
Not really, but
So I did have a question, it's the diamonds 1% of what was in my mind, because so much of what's above ground is tied up in jewelry,
yes.
industrial diamonds.
So great question. So his question was, the above ground, the diamonds that are held by investors are 1% of what? That number is about 1.2 trillion, and where we get that number is we don't know all the jewelry in the world, but all of the diamond mining has been tracked very closely for about 70 years. So De Beers and Alrosa and Dominion Diamond and Rio Tinto, they've always reported their rough diamond sales by carat. And we estimate, not we, but the industry estimates from all of the rough diamonds sold over 70 years, maybe 100 years for some, like De Beers, what's the total market value of those diamonds today? And the answer to that is about 1.2 trillion, which means that the diamonds, the above ground diamonds, are worth more than all of the silver, platinum, and palladium combined. So diamonds are second only to gold. What's the per year production of rough diamonds? Rough diamonds per year are about 40 billion, but those get cut and polished and marked up the supply chain. One big benefit of Diamond Standard is that we're the most efficient diamond buyer in the world. And overwhelmingly, we buy our diamonds directly from the people that cut them. There's no middlemen marking them up. And that's how we're able to sell this bar for much less than it would cost you to buy it, the individual diamonds for cash.
And then 1.2 trillion then is valued at your number.
No, that's valued at the wholesale value of diamonds. There's a lot of wholesale indices like Rappaport, so that's the wholesale market value estimate, and it's based on averages. Yeah, that would be the bid. That's the liquidation value. Yes, sir.
Buy from outside and you are not American. You need outside the country.
Yes, the question is, can you buy this from outside the country? The answer is yes. We're regulated, so we have to do what's called the KYC, know your customer. But we're allowed to sell to clients in any country that's not on the U.S. restricted list or on the Bermuda restricted list. So as long as you're not from North Korea or Iran or now Russia, you can buy this commodity. And you do not have to be accredited. Anybody can buy this and take delivery as long as they pass KYC.
Or really in like your home, like $30
The question is, how much is in our vault?
you can go and
I'm sorry, I didn't get the whole.
Once you buy the
Yes?
diamond, now can you leave it in your wallet?
Yes. The question is, if you buy this commodity, can you leave it in our vault? The answer is yes. If you've passed the KYC, we will hold the commodity for as long as you want. If you forget to pay your custody bill, that becomes a lien against your coin. And the day you finally want to take it out, you have to catch up on your $36 per year. But we'll hold the coin as long as you like. And you can be from any country in the world as long as it's not OFAC restricted or sanctioned. Yes, sir. Yes. I hate to break it to you, but that's not a real coin. Yes, sir.
It's $36 per year per coin?
Yes, sir. And if you hold a bar, even though the bar is 10 times the value of the coin, the custody of the bar is $200 per year. So a lot of the institutions buy the bars because they're cheaper to custody. Those fees, I guarantee they're going to go down because we pass through. We don't mark up the custody fees because we're doing it for the first time, and it had to be in Delaware. Brinks actually built a custom vault for us in one of their existing facilities that handles cash, but then they charged us through the nose. But that's going to be coming down. Yes, ma'am.
Okay, so I only want to buy, say, 2 coins at a time, but, I keep stacking them up, and once I accumulate 10 coins, can I then just swap them for a bar?
The question is, can I swap 10 coins for a bar? You would have to do that through the exchange. So you would essentially sell your 10. There's no fees. There's no taxable event. You'd sell your 10 coins in the exchange, and then you would buy 1 bar. We don't have a trade-in. For a big client, we probably would. But we built that into the exchange, so that's easy to do. We have no interest in that? No. We pay it all to Brinks. Yeah, and over time, we're going to be out of the custody business. There'll be other, like with gold. Our goal is not to do everything. Our goal is to make them investable. We're going to have JP Morgan taking over the custody. We'll have all kinds of dealers and distributors taking over. That's why I think it's also a good time, because pretty soon we're going to stop selling directly to consumers. We're going to use distributors, like with gold. Yes, sir.
What do you think the impact is going to be from lab-made diamonds?
The question is, what's the potential impact from lab-based diamonds? Great question. So when we started, actually, it was very positive impact because all of the diamond vendors around the world were scared. What is lab-grown diamonds going to do to our business? They were also scared of us because we're those jerks that are making diamond prices transparent. And we're making an exchange that cuts out all the middlemen. So they weren't very happy with us either. And but because of the threat of lab-grown diamonds, we were able to get 175 of the best vendors, and we also got the 2 leading gem labs to be our partners, and they grade and inspect all of our diamonds and assemble them. So that was very positive. It greased the wheel for us. We've had synthetic sapphires and rubies for 50 years that are chemically ruby. And rubies are at their all-time high, and sapphires. So it hasn't damaged those. If you look at natural diamonds over the last 5 years or so, which is when lab-grown diamonds have kind of come to the market, lab-grown diamonds have gone down over 70% in value, and natural diamonds have gone up 40% in value. So we believe, and so does Zales, for example, that a lab-grown diamond simply doesn't present any value. It's not a natural resource. It's just another thing printed on a printer. And if you bring a lab-grown diamond to a gem lab, they can tell instantly that it's lab-grown. And if you buy a ring from Zales that has a lab-grown diamond, it voids their return warranty. You can't trade in a lab-grown diamond because they know it won't hold their value. So what we've seen, because diamond sales are at a 10-year high right now, jewelry, not for us, it appears that lab-grown diamonds are being bought by people that would not have bought diamonds otherwise. Could be millennials who believe the the environmental marketing, which is not really true, that diamonds, consume carbon. And, there's a lot of myths with diamonds that is our challenge to overcome. For example, a lot of people think De Beers controls the diamond market. They don't. They've been broken up for 20 years. They don't even own the mines, but they distribute about 22% of diamonds. By far, other vendors are much larger. So there's a lot of myths that we have to overcome. But synthetic diamonds could have an impact on natural diamonds. I think it's more likely that our activities of buying 15% of diamonds drive up diamond prices so that Azales can't sell natural diamonds. They're just too expensive. And then I think that synthetic lab-grown diamonds become a substitute for kind of the mid-tier market. Tiffany's and Cartier, they'll never sell synthetic diamonds because they say it's not luxury. And I think they're right. Yes, sir.
Do you see the value of these coins fluctuate?
Yes. So this year they've gone down since about February. So they'd gone up 40%. Now they've come down about 5%. So they're up 35% net. And it's really strictly because of jewelry demand has fallen in China. So China was the fastest growing global jewelry market. U.S. is still by far the largest, but China was growing fastest. And now China's in their, how many years of COVID shutdown. And so that's just decimated all the jewelry buying in China. And that's reduced that demand pretty significantly. Say it again? Yeah, so here since we launched, the purple line is diamonds. So as you can see, this just goes back to 2020. It was up almost 40% here, and now they've come down. But that performance has outperformed gold, silver, and the S&P over the same period of time. I'm not sure this chart is right. I think the numbers aren't quite lined up right. But anyway. So the performance has actually been quite good for, outperforming almost all other commodities, except for oil. Oil's done some crazy things lately. But what I look at is the long-term chart with gold at the top in yellow. Gold has gone up 5x in price relative to diamonds over 20 years. And we think that gives a measure of the magnitude that diamonds could go up as we launch all the financial products that you have for gold. And that's the kind of returns we're hoping for. Yes, ma'am.
I have a question about market price. I understand how you explained the electronic exchange where you place the bid. What percentage of the finished diamonds are transacted on that electronic exchange?
Her question was, what percent of diamonds are transacted on our spot exchange? So 100% of the diamonds we buy, we can only buy through this exchange because our bidding has to be transparent and regulated. Our exchange represents less than 1% of the overall market today. It's very, very small. But what's interesting is that there's not that much of a float in finished, polished diamonds, and that's what we can buy. So if you're a giant retailer like Tiffany's, you'll very often buy uncut diamonds, and then they'll buy them over a 4-month contract, have them cut. So we can only buy the liquid available float, which is a much, much smaller percent of the total annual production. So liquid float might be $1 billion at any given time, in which case we're buying sometimes 1 million or 2 a week. Yes, sir.
The diamonds you're quoting the diamond market is a whole market, Tiffany's jewelry, and those once the diamonds are purchased and placed in this coin, what tethers the value of these to the whole market?
Right.
Obviously, maybe there's not a market for these coins, but there's still a market for jewelry.
Right. The question is, once we put the diamonds in the coin or bar, what tethers these diamonds to the overall diamond market? Couple things. Number one, they're statistically representative. They represent a valid sample. But also, I built this so that you could get the diamonds out. You simply drop this in a can of paint thinner that you buy at any hardware store, and in the morning, the plastic's gone, and you now have 8 certified loose diamonds that you can do whatever you want with. You can make a bracelet, you can sell them to your jeweler. I don't recommend it, because if you sell loose diamonds, you're going to get that 40% haircut that happens up until today with diamonds. If you leave them in here, they're liquid. And I saw this all the time in the securities business. If something is liquid, it's inherently more valuable because you have that low friction, the ability to liquidate it and sell it any time. Keeping it in here is the most liquid form. We showed you that gold chart with 30% of gold in bars. That gold never sees the light of day. It's that base amount that's just held in custody, used for investments. That's what we're creating. We don't think hardly anybody will take the diamonds out unless, they really want to divide it amongst their grandchildren, for example. All right, I want to thank, one more question? I want to thank everybody for attending this session. Please, those sample coins are for you to take. They're not real diamonds, but you're welcome to take them. A lot of our clients, it turned out, would buy 10 coins, and they would say, I want you to send me one at home and keep 9 at Brinks. So we now send them one of these so they don't have to. They don't have to take the risk. But this is what the actual coins look like, but it's not real diamonds, unfortunately. Thank you.